Automakers are sounding the alarm and it's time to talk about it. This week was a busy week in the car market. First, we had the CARS rule getting thrown out by the Court of Appeals, a real bummer for everyone except car dealers. Interest rates did not go down, and the Federal Reserve announced a pause on interest rate cuts while offering no future insight on interest rate cuts moving forward, a decision that stops the dream of lower interest rates for consumers dead in its tracks. And a slew of companies reported their Q4 earnings, two notable ones being Tesla and General Motors. And if you didn't already get the idea from the title of this video, some of the data really doesn't look great. Now, General Motors, all things considered, had very good earnings. They beat analyst expectations, with earnings per share at $1.92 adjusted versus the $1.89 that was estimated, and revenue was at $47.7 billion, which was well above the $43.9 billion that was estimated by experts. And that $47.7 billion in revenue, well, that was up 11% from the same quarter the previous year. And one of the interesting things about GM is something that we've seen with many automakers post-pandemic, is that it feels like quarter after quarter, every major automaker is reporting record high revenue. But these same companies that are reporting record high revenue are also reporting income declines. And that was most certainly the case with GM, with not only this most recent fourth quarter, but the entire year of 2024. GM's $6 billion in net income for 2024 was down 40.7% from 2023. While on the flip side, GM's revenue last year increased to $187.44 billion, which was up 9.1% from 2023. So revenue is up 9.1%, while net income is down 40%. And the overseas market for General Motors is still rough waters, with adjusted earnings of $303 million last year, down by 75% compared with 2023 in markets like South Korea, the Middle East, and Brazil, and its income in China was a loss of $4.41 billion. GM CEO Mary Barra stated on the earnings call that a large focus in 2025 will be to continue to grow and increase the profitability of GM's EVs, but also look towards growing their autonomous driving sector of their business. Now, as I mentioned earlier, all things considered, General Motors' earnings was quite good, but the one area where they did get quite a lot of criticism, and can arguably be why the stock price went down after the earnings call was released, was due to General Motors' lack of enthusiasm when it comes to the future in 2025. GM did not provide confident, clear plans to navigate the volatility of the Trump administration, with CEO Mary Barra saying, and I quote, "uncertainty over trade, tax, and environmental regulations," with GM being one of the many automakers that could potentially be subject to that 25% tariff that has been thrown around on at least part of their lineup and their parts, and environmental regulation, leaving electric vehicles in a bit of a lofty place moving forward. These are absolutely struggles and hurdles that General Motors will have to address moving forward. But now let's move on to the real dog here, which is Tesla. Now, we've known since earlier this month that Tesla saw their first sales decline in 2024, at least here in the United States, with their sales declining by 1.1% in 2024 compared to 2023. And when it comes to the fourth quarter, Tesla missed earnings expectations, with earnings per share at 73 cents per share rather than the 76 cents expected, and revenue at $25.71 billion versus the $27.26 billion that was expected. Tesla's revenue increased just 2% from $25.17 billion a year earlier, and automotive revenue fell by 8% to $19.8 billion from $21.56 billion in the same quarter in 2023. And of that, $692 million came from regulatory credits. At the same time, operating income declined by 23% year over year to $1.6 billion. And the company cited reduced average selling prices across its Model 3, Model Y, Model S, and Model X lines as a major reason for the decline. Net income dropped by 71% from a year earlier to $2.32 billion. Tesla has a real problem on their hands, and I think that this problem is so multifaceted that I don't even really know how to address it all in a video. Tesla is no longer the only, nor necessarily the best EV on the market. There are so many other options out there, and other automakers are starting to gain market share. Sure, Tesla is still absolutely the dominant player in the EV space, but Tesla, all things considered, is absolutely concerned with their competitors in their space, and this is so blatantly obvious based off of the Tesla discounts that they've been rolling out for the better part of the last 2 years. Tesla discounts started toward the end of 2022, beginning of 2023, and they seem to occur in batches when the automaker needs to stroke sales, with the most recent discount batch coming at the end of 2024 in an effort to bolster 2024 sales numbers. But not only does this create an environment where a potential buyer is waiting to purchase in anticipation of a discount, which isn't a good place to be, but it also creates a scenario where would-be buyers of Tesla vehicles may be a bit skeptical because they're thinking to themselves, okay, if I buy this $40,000 Tesla today, could it be worth $35,000 or $30,000 tomorrow or next week? Who knows? This is a level of volatility that we just don't see with other automakers. Automakers don't slash prices by 5, 10, 15% on a whim to incentivize sales. Sure, dealers might in order to move products, but automakers across an entire vehicle lineup, they just don't. This has created a bit of a scenario where there is a cycle of toxic discounts, and this cannot continue forever because Tesla can only continue to slash their prices by so much before they become unprofitable as a result. So the question is, what is Tesla going to do to increase sales once they can't discount cars anymore? Secondly is the obvious dive into more of the autonomous driving side of things, energy and the tech side of the business, and according to CNBC, Musk has been telling investors in recent quarters to focus less on the core business as it exists today and more on a future of autonomy and robotics. A topic that not only Elon Musk but Tesla has been discussing over and over again over the course of the last few years, but it does make you ask the question, what does the future of Tesla vehicles look like? And of course, you have the same volatility that other automakers are facing, like tariffs and EVs in the new administration, a factor that the Tesla CFO said would impact Tesla's business. But almost more than any of this is Elon Musk himself. According to some studies, 30% of all Tesla owners who sell their Teslas cite Elon Musk as the reason they're selling, with other car buyers saying they went with other brands because of Elon Musk. And a quick Google search will bring up dozens and dozens of articles speaking about the same thing. I am genuinely surprised that Tesla hasn't tried to do more to either quiet Elon Musk or potentially oust him altogether. And as of now, at least, it doesn't really feel like Tesla as a company is wavering in their support of Musk. I mean, we look at the obvious, being extremely involved in a very contentious election, and then being an unelected official in that administration, a move that regardless of the side of the aisle that you stand on politically feels like a massive conflict of interest, though a conflict that I would be willing to bet Tesla embraces. Not to mention that salute that he gave at the inauguration celebrations, which for obvious reasons I'm not going to show. But I've even in the past been curious on how Tesla allows for Elon to be so involved in so many different companies. Sure, many CEOs serve on the board of other companies. For example, GM's Mary Barra serves on the board of Disney, but she isn't the CEO of it. But Elon Musk is the CEO and is very involved with multiple different companies. Tesla, SpaceX, and X, formerly known as Twitter, are the obvious ones, but Neuralink and the Boring Company are additional ones as well. Not to mention that Elon Musk's political involvements and associations have alienated a large group of people at a time where Tesla really needs it. A time where, sure, other automaker CEOs no doubt have their political views, but they absolutely aren't making quite the show of it that Elon Musk has over the last year. I just don't get it, especially at a time where other automakers are making better and better electric cars that are competing more efficiently and effectively with Tesla. I think that these decisions that not only Tesla but Elon Musk have been making over the last 6 months to a year, I think it's going to come bite them in the butt. The bottom line is automakers are absolutely seeing a shift, and some automakers are sounding the alarm more than others. Like always, you guys, I hope that you enjoyed this video. If you have any questions, comments, if you have anything to add, I would love to hear it, so make sure to leave a comment down below. And while you guys are at it, make sure to hit the like button, hit that subscribe button, and hit the notification bell, and I will see you guys in the next video.